At the beginning of this year, there was a pretty widely held expectations that the U.S. Fed would cut rates 6 times during the course of the year. That is now down to 2, or in some cases even 1. We're going to look at that story. Also, if you bought or sold a stock on the TSX today, the rules have changed. I'll update you on the new T+1 regulations. The Competition Bureau is once again taking on Canada's big grocers. And JP Morgan CEO Jamie Dimon, he says we'd better stay vigilant, and he talks stagflation. Today is Monday, May the 27th, 2024. Let's get started with today's top stories. Quick note here before I get into our first news story. Last summer, we joined forces with the folks at Blossom Social. We went to a number of Canadian cities and we had meet and greets there with over 1,000 of our students from our Investing Academy and Blossom Social members. It was truly inspiring. It was incredible to meet with so many people. We just, chit-chatted, answered questions, basically just connected with our community. And that was really a good experience. Well, we are gearing up again to hit the road soon. And for those of you who are interested in coming out and meeting with us, I will encourage you to sign up for one of these events. Now, a quick note, we did sell out each of the venues last year because of the limitations of the venue sizes. I'll expect that we'll have the same issue again this year. We will be in Toronto on June 25th. New York, June 30th, Montreal on July the 2nd. Then we're also booked in for Calgary on July 15th, and then Vancouver on July 18th. And this year, we're probably going to be joined by 15 or maybe even 20 different creators that you're probably familiar with. Notably, Adrian, who's better known as the Canadian in a T-shirt, will be there. Shay, also known as the Humboldt Trader. Zach Hartley, Instagram and TikTok phenom Joy Yi Yang will be there as well, and many others depending on the location that we're going to be at. So if you are a DIY investor, I would encourage you to come out, just hang out with us. I will put links in the description of this video. Well, as it's shaping up to be here, it looks like the U.S. Federal Reserve Board is now unlikely to cut interest rates this summer, in contrast to what we thought at the beginning of the year. And we've seen stronger than expected economic data, and then recent comments in particular from the bank's policymakers. They are suggesting that the Fed is happy for the time being just to maintain its current policy. Traders have adjusted expectations as a result of this as well, are now anticipating only 1 rate cut by the end of the year by some measurements. And we've seen the impact on this. Last week, the Dow Jones saw its worst day of 2024 this past Thursday. That ended a 5-week winning streak. The economic data that we're looking here, it indicates stable or rising growth and persistent inflation. And that gives the Federal Reserve really no immediate reason to cut rates. It kind of gives them an excuse just to hold things the way they are right now. And Fed Governor Christopher Waller, he says that he needs several months of data showing easing inflation before he will support a rate cut. Bank of America economy Michael Gapin, he seems to agree, and he says recent Fed speak and the May FOMC minutes make it clear that the upside inflation surprises this year, coupled with solid activity, are likely to take rate cuts off the table for now. So overall, the Fed stance is remaining cautious right now. Some officials have even given consideration to possible rate hikes if inflation gets any worse at any point over the next coming months. At the beginning of the year, like I mentioned, traders were anticipating at least 6 cuts. But when you look at pricing Friday afternoon, that moved to roughly a 60% likelihood there will now be only 1 cut, and that's according to the CME Group's FedWatch tool. On Friday of this week, we're going to see the Commerce Department report on personal income and spending, and that will include the Personal Consumption Expenditures Price Index. And economists there are expecting a modest monthly gain, but it might not be enough to prompt a rate cut. Goldman Sachs, they've shifted their expectations for the first rate cut to September, although it does still there. They anticipate 2 cuts this year. And Goldman economist Michael Miracle, he says, we continue to see rate cuts as optional, which lessens the urgency, while the Fed leadership appears to share our relaxed view on the inflation outlook and will likely be ready to cut before too long. A number of FOMC participants still appear to be more concerned about inflation and more reluctant to cut. Looking for a smart way to invest your money? Well, BMO ETFs and mutual funds, they offer a range of solutions for different needs, different goals. So whether you want to diversify your portfolio, whether you want access to innovative strategies, or just align your investments with your values, BMO GAM, they have you covered. Learn more about how BMO Global Asset Management can help you achieve your financial objectives with confidence and clarity. Visit BMO GAM today. That's BMOGAM.com and find out more. If you bought or sold a stock today on the TSX, you should be aware that the rules have changed. When I started my career as an investment advisor all those years ago, when you bought a stock on the TSX or the New York Stock Exchange, you had 5 days to pay for it. So that was a good thing. But if you sold one, you didn't get your money for the same 5-day time period. That was known as T+5 settlement. In 1995, that changed to T+3. And then from T+3 to T+2 back in 2017, and it's been there up till now. Well, in February of last year, the U.S. Securities and Exchange Commission, they decided to shorten that standard settlement cycle for most broker-dealer transactions from T+2 to T+1. That is effective actually as of tomorrow, May the 28th. And what this change means is that transactions are going to settle 1 business day after the trade instead of the current 2. Now here in Canada, the same rule came in effect as of today. Canadian regulators, they published a notice outlining their views on the benefits of this shorter settlement cycles. They emphasize the need for close collaboration and coordination across the Canadian securities industry to align with the T1 alignment in the U.S. markets. Now, settlement, this is the process where securities are transferred to the buyer and then the cash to the seller. So with the new T+1 settlement, transactions will now settle, as I mentioned, in 1 business day. And for example, if you sell your shares today on Monday, you're now going to get your money tomorrow on Tuesday. Buying securities will also, though, require payment 1 day later. So, for example, in your margin account, if you buy a stock on Tuesday, you're going to need to pay for it by Wednesday. That's shortened from the previous Thursday, where it would have been before. So, overall, the shift to T+1, it is a significant change in the industry. It's expected to bring long-term benefits by reducing the settlement risk and, of course, improving market efficiencies. Canada's Competition Bureau is investigating the parent companies of both Loblaw and Sobeys for alleged anti-competitive practices. And these investigations, they're suggesting that the company's use of what they're calling or what are called property controls in lease agreements restricts competition. So the controls that they're talking about here, they're alleged to limit potential tenants and their activities, which affects the overall grocery market. Deputy Commissioner Anthony Durocher, he highlighted the issue and he said property controls can be a barrier both for independent grocery stores and chains looking to expand. And this has led the Bureau to recommend limiting these controls to boost competition and to ease entry of new supermarkets into the market space. Empire, this is Sobeys' parent company, they have opposed the investigation, going so far as to call it unlawful. They're arguing that the probe gives the commissioner the appearance of a lack of independence amid public criticism over grocery prices. Now, on the other hand, you have Loblaw's parent company, which is George Weston Limited. It is cooperating with the review. Spokeswoman Catherine Thomas, she acknowledged that restrictive covenants are very common in many industries, including retail. They help support property development investments. So these investigations are focusing on 2 types of property controls: restrictive covenants and exclusivity clauses. And these controls, they can limit land use and leasing options, and that could potentially exclude competitors and also dictate business terms. The Deputy Commissioner says the property controls may give the companies the ability to exclude actual or potential competitors from selling food products within certain geographic areas. Now, the industry is fighting back, as you probably would expect, and Michael Osborne, he's a competition law expert, and he notes the Bureau has never brought a joint dominance case before. Now, that in and of itself isn't the end of the world and the end of the discussion here, but it is something that the Bureau is going to have to address as they move forward with this investigation here. Empire, they're also disputing the anti-competitive nature of the property controls. They assert that they have been used across various retail sectors for decades now. So whatever the outcome of this investigation is, it does have the potential to have a significant impact on the Canadian grocery market and also the regulatory landscape. JP Morgan Chase CEO Jamie Dimon, who's kind of well known for not mincing his words, he's got a lot of attention over the past few days after he said that a hard landing for the U.S. economy can't be ruled out. And he was speaking at the JP Morgan Global China Summit in Shanghai. And he acknowledged in response to a question the historical possibility of such an outcome. And he said, could we actually see one? Of course, how could anyone who reads history say there's no chance? Now, personally, I think that this whole issue has been blown a little bit out of perspective, maybe a lot out of perspective. For example, the Daily Mail, they ran a headline that said, JP Morgan chief Jamie Dimon issues ominous warning about U.S. economy. Newsweek's headline said, major U.S. bank boss issues grim economic warning. Now, I would push back on both of those headlines. Diamond did say that you can't rule out a hard landing, but that doesn't necessarily mean that he's expecting one. They're, to me at least, dramatically different, but that's the tone that we're seeing in some of these headlines. Now, further in the speech, Diamond did warn that of the worst case scenario for the U.S. economy, in his opinion, would be stagflation. And that's where inflation rises, but growth slows amid high unemployment. On that topic, he stated, the worst outcome for all of us is what you call stagflation, higher rates, recession. That means corporate profits will go down, and we'll get through all of that. If you aren't familiar with stagflation, I will put a link just above me here to a video that I posted previously, which explains in more detail how stagflation works. But regarding interest rates, Diamond believes they could still rise slightly. And he said, I think inflation is stickier than people think. I think the odds are higher than other people think, mostly because the huge amount of fiscal monetary stimulus is still in the system and still may be driving some of this liquidity. Now, Diamond also questioned the reliability of market predictions, as he is wont to do. Looking ahead, he emphasized the unpredictability of economic outcomes, particularly regarding inflation and interest rates. And he stressed, just because it says X doesn't mean it's right. It's always wrong. You go back to any inflection point of the economy ever, and people thought X, and then they were dead wrong 2 years later. So in short, Diamond's cautious outlook here pretty much sums up his view on the potential challenges facing the U.S. economy. If you are not already subscribed to our Pulse newsletter, I'm going to make that nice and easy for you. I'll put a link in the description of this video. I'm here Mondays and Wednesdays with this report. As always, thank you so much for watching this report. We'll see you in a couple of days.